Today we're going to look at the stock drill down. This is where we run an initial screen to find stocks that we might be interested in, and then look more deeply at each specific stock to see what its factor exposures are. So for example, here I'm going to run a fairly generic screen based on one of our presets. And I'm going to use the best of the best, where I'm looking for superstar stocks in all the categories. So these stocks will have good value scores, they'll be low cap, they'll have high quality, good momentum, and low beta. So I know by definition that all of these stocks are good according to their factor exposures. What I don't know is anything about each individual stock. So now I'm going to look at the first stock on the list, and this is a good one for us to test here because it's one that I've never actually heard of. It's ACNB Corporation. I know it's a Southwest Regional Bank. So if I come here and click on the company name or on the symbol, it will take us to the stock drill down page. The first thing we see here is an overview of the company and its business. So at this point, to me, knowing very little about retail banks, this looks like a very generic retail bank, small regional bank. We see that its price has been around 20, recently appreciating to 22.5, which is a decent appreciation over the last year, which is why it scores well on momentum. We can look further at its price recently. In the last month, it's moved from 21.74 to 21.97, so the last month hasn't been particularly outstanding, but then again, we don't expect things to work out over every single month. So next I'm going to look at the actual value score of the stock. Now we can see it has a good value in that its value of its stock relative to its book value is good. And more importantly here, we can see that this has consistently been the case as long as we've been measuring it. In 2011, the value score was 75. It stayed in the 70s the entire period we've looked at it. It's currently ranked 69. Next, we can do the same sort of analysis for size. And we see that again, it's a small cap stock and has stayed a small cap stock for the period we're looking at. Quality is perhaps the most interesting thing to look at when we do the stock drill down. Because it's a composite measure and consists of 4 subcategories, each with around 5 further subcategories, there's a lot to be learned from the drill down. First, we can see that the historical quality score, again, has been relatively high and relatively constant. It dropped down here, but only into the 70s. So this has always been a high quality stock. So specifically in this case, what does that mean? Well, we can see that its overall growth isn't particularly astonishing. It's fairly mediocre when it comes to overall growth. And this is also roughly the case for both gross profit, assets growth, and return on equity. So it's not getting its entirely great quality score from the growth measure. On the other hand, the safety score is fantastic. It's scoring around 98 for safety. What does this mean in particular? Well, safety is a combination of the volatility of the company's stock price, generally considered a proxy for risk, and the company's risk of financial distress. And we can measure that by things like the amount of leverage the stock has, its amount of bond issuance, and so forth. So when we break down safety, we can see that its various components, it scores well, for example, on beta. It has a very low correlation with the overall stock market, and we know that's a good score. And we know that's a good factor exposure to have. It also has very low volatility, so its price volatility, even leaving aside the fluctuations of the stock market, is also very good. It has very low leverage, which indicates that it would have low amounts of bonds outstanding. On the other hand, its return on equity is a fairly volatile number. It doesn't score particularly well in this category. So Olson's O is a measure of financial distress. It takes into account a number of different fundamental measures to try and predict the subsequent possibility of bankruptcy. The lower the score is better, but here we're looking on a percentile basis. So here we have a bankruptcy probability, according to Olson, of 13%. And that's relatively good. It scores roughly in the 38th percentile. Altman's Z-score is a different way of trying to measure roughly the same thing. Altman says that the stock does have some risk to it. I mean, this is to be taken into account. Payout refers to the amount of money that's going to be returned to you as a stockholder. So this would be changes in equity, changes in debt, stock buybacks, dividends. It's long been known that stocks that pay high dividends tend to also appreciate. So a dividend-paying stock is good for two reasons. You get the dividend, but also the stock price tends to appreciate. This is actually true for all forms of payout to shareholders. So the fact here that the company has a good payout score of 69 is good news for us. Equity issuance, completely middle of the road. It has low debt issuance, which again relates to its excellent leverage score that we saw here. And its payouts as a function of profits are also good. This company makes money and it tends to return a lot of it to shareholders. The profitability scores, again, relatively middle of the road. The gross profits as a function of assets are kind of low. On the other hand, I would note that this is a financial company, and that tends to be the case for financial companies. That is more of a factor that's related to the entire industry than any one specific stock. So this is quality. If you're more specifically concerned with any of these individual scores, you can then go and do more research. On the other hand, I just like to look at the overall quality number and then the major breakdowns and subcategories. Momentum measures the stock relative to other stocks in the stock market. And here we see not only has the stock price gone up, it's gone up relative to other stocks. Momentum is a relatively noisy number. Here we can see the stock fluctuates from around the 40th percentile down to the 29th, but over the last 6 months has actually been a very good score. Finally, we have low beta. Beta is just the correlation of the stock to the overall stock market. We see that the stock not only has low beta score, a good beta score in that it has low beta, but it always has. So that's how I use FactorWave. Once I've decided that a particular stock gets through our screening process, I go then through and look to see where each of these numbers are and where they have been. The current values of the factors are certainly the most important, but I also like to have the reassurance that they're not one-off aberrations. I like to see that the factors have had some degree of consistency over the time period we've looked at.